I'm going to ask you one question, and your answer will tell you if you're winning or losing. Ready? Last month, you made your credit card payment, right? You sent the money, you got the confirmation. Maybe you even paid more than the minimum. You felt responsible, productive, like you were handling it. Now here's the question. Did your balance actually go down by the amount you paid? Not did you make a payment? Did the balance decrease by what you sent? If you don't know the answer, or if you're suddenly feeling uncomfortable, that feeling? That's what this video is about, because millions of Americans are making payments every single month, getting confirmations, seeing payment received messages, and feeling like they're making progress. But the math tells a completely different story. A story the credit card companies are very happy you don't understand. In the next 10 minutes, I'm going to show you why debt feels like progress, even when you're actually losing money, and more importantly, how to stop losing. Stay with me. This changes everything. Here's what makes credit card debt so insidious. It's designed to feel like progress. Let me show you exactly what I mean. Meet James. 28, software engineer, Austin, Texas. Makes $75,000 a year, smart guy, responsible budgets. Credit card balance, $9,200. Every month, he pays $450. The minimum? $225. He's paying double, doing everything right. Every month, he gets a text. Payment received. Thank you for your payment of $450. Every month, his banking app shows. Payment processed successfully. Green check marks, confirmations, digital pats on the back. It feels productive. It feels like progress. And here's the genius part. The system is designed to make you feel that way, because feeling productive keeps you paying. But let me show you what's really happening. After 6 months, James has paid $2,700. 6 months, nearly $3,000. He checks his balance expecting what? Maybe $6,000 left? The balance? $8,900. Wait, paid $2,700. Balance only dropped by $300. Out of $2,700 sent, only $300 actually reduced his debt. That's 11%. 11% of his payment went to debt. 89%? Gone. Vanished. Disappeared. Where? That's what we're about to uncover. The credit card industry has spent billions studying human psychology. They know exactly how to make you feel good, while they extract maximum profit. Here are the psychological tricks. Trick number 1. Confirmation bias. You make a payment, you get instant confirmation. Payment received. Your brain registers. Task completed, progress made. Dopamine hit. But the confirmation isn't about progress. It's about payment received. They confirm you sent money, not that your debt decreased. Trick number 2, the green check mark. Humans are wired to see green as good, check marks as success. Every statement. Green check marks everywhere. Payment, on time. Check mark, account, in good standing. Check mark, minimum payment, met. Check mark. Your brain sees success, progress, approval. But notice what's not prominently displayed. Principal reduced this month $47. That's buried. Small print, end of statement. Trick number 3. The monthly reset. Every month feels like a fresh start. New statement, new minimum, new payment. It feels like forward motion, like you're climbing a ladder. But what you don't see is that the ladder is on a treadmill. You're climbing, but the treadmill is moving backward. Trick number 4, social proof. Everyone has credit card debt. Everyone makes monthly payments. It's normal. It's what responsible adults do. So it must be progress, right? Wrong. Just because everyone's trapped doesn't mean it's not a trap. Let me break down exactly where your money goes. Because once you see this math, you can't unsee it. James's situation: $9,200 debt, multiple APRs on one card, balance 1, $4,000 at 28%, cash advance from 2 years ago. Balance 2, $3,000 at 23%, regular purchases. Balance 3, $2,200 at 0% promo, balance transfer expiring in 3 months. He sends $450. Feeling good, responsible, making progress. Here's the actual breakdown. First, interest charges. 28% on $4,000 equals $93 monthly. 23% on $3,000 equals $58 monthly. 0% on $2,200 equals $0. Total interest, $151. His $450 is now $299. Second, fees. He went over limit last month by buying groceries, $40 fee. His $299 is now $259. Third, payment allocation hierarchy. Remember, the bank decides where it goes. All $259 goes to the 0% promotional balance. Why? Because that debt costs them nothing. They pay that off first to get to the profitable stuff. 0% balance, now $1,941. 23% balance, still $3,000. Untouched. 28% balance, still $4,000. Plus that $93 interest. So it's now $4,093. Let me say that again. James paid $450. His worst debt increased by $93. He sent money, got confirmations, felt productive. But his most expensive problem got worse. And this happens every single month. This isn't an accident. This is the most profitable business model in consumer finance. The credit card industry makes over $120 billion annually in interest and fees, not from people who default. Defaults lose money from people like James, people who pay reliably, month after month, year after year. They call them revolvers, customers who revolve a balance month to month. And here's what makes it brilliant. These customers feel responsible. They're not missing payments. They're not defaulting. They're doing exactly what they're supposed to do. They feel productive, but they're trapped, paying hundreds, sometimes thousands, in interest annually, while the balance barely moves, and the psychological design ensures they keep feeling like they're making progress. Because if they felt trapped, they'd find a way out. But if they feel productive, they keep paying forever. All right, enough horror. Let's fix this. Real progress requires understanding one thing. You must pay down principal, not just make payments. Here's how. Strategy 1. Attack the highest APR first. Ignore the minimum payment game. Pay minimum on everything except your highest APR balance. Throw everything extra at that one. In James's case, focus all extra money on that 28% cash advance, get it to 0, then move to the next highest. Strategy 2. Stop using the card. This sounds obvious, but most people keep using it. Just for emergencies? No, cut it up, freeze it. Remove it from your wallet. Every new charge resets your progress. Strategy 3. Pay twice a month. Instead of one $450 payment monthly, pay $225 every 2 weeks. Why? You reduce the average daily balance. Interest is calculated daily. Lower daily balance equals less interest equals more to principal. Strategy 4. Negotiate your rate. Call the credit card company. Script: I've been a customer for X years. I'm struggling with this rate. Can you lower it? Otherwise, I'm looking at balance transfer options. Many will reduce your rate, especially if you've paid on time. Lower rate equals more to principal.